internet has created new ways to do old business more efficiently. These new online businesses have put pressure on the institutions and big businesses of the past. Some have become obsolete. Amazon is replacing brick and mortar bookstores like Borders. Priceline and other online travel companies have put travel agencies out of business. When is the last time you went to a record store to buy a CD? I believe next up are big banks. The new generation of millennials are growing up without needing banks. They do all their banking online. There are services like PayPal, Google, and Amazon which are more familiar to consumers of today than, say, a JP Morgan or a Wells Fargo. A new internet company, Lending Club, perfected peer-to-peer lending and is already taking market share away from big banks. Lending Club, a peer-to-peer lending company, is transforming the banking system to make it more efficient, transparent, and customer-friendly. Lending Club uses technology to operate a credit marketplace at a lower cost than traditional bank loan programs, passing the savings on to the borrowers in the form of lower rates and to the investors in the form of solid returns. By providing borrowers with average savings of 29% on their interest rates and investors with steady, strong returns, Lending Club has earned among the highest satisfaction ratings in the financial industry. If peer-to-peer lending is so great, then why can't big banks enter into the market and do it? I'll have Renard Lepleche, the CEO of Lending Club, tell you.
You've seen that over and over again in the history of technology-based innovation. It's typically been very hard for the incumbent to drive costs down and adopt new technology and remove all the legacy systems and legacy cost structure down to the level of the technology innovator. So bookstores have not been able to replicate Amazon, and travel agents have not been able to replicate Priceline.
The consumer lending market is a total of $11 trillion. 4.4 billion of U.S. P2P customer loans have been originated already, and the industry's largest players are currently growing at an annual rate of approximately 200%. So where does all this money come from? It comes from people like you and me. To help you better understand what Lending Club is all about, I'll demonstrate by showing you my account. So far, I've had Lending Club for about a year. So far, my rate of return is 11%. I just put a little bit of money in here, as you see, just to test out and see how this platform works. The interest I've received so far is $395. I have 75 loans. So the purpose of this is to make loans to other people on the internet that need money, and so I limit my risk. I made 75 loans, and each of these loans I made are all for just a little bit of money. So $22 here, $22 there. Most loans are 25 or 50. So if you spread out across a lot of loans, you limit your risk because if someone defaults, it doesn't hurt me that much. And then there's C ratings, G ratings. I'm a riskier type person, so I have a lot of D, E, F rated loans. So these people don't have as good credit as people that have A, B, and C, but you get lower interest rates. So that's about it. I just wanted to show you. Big bank personal loans are in a steep decline. Banks are consolidating, which is creating big bank and less community. Customer service is slipping. Big bank customers are just statistics, and there is no personal relationship. Following the 2008 financial crisis, banks also decreased lending. Banks continue to make huge profits because of their ever-increasing spreads. Even though banks have loaned less money to consumers, they are making huge profits off the spreads. The spreads is the difference between the low interest rate a consumer gets on their bank deposits and the high fees interest rates the consumer pays when they borrow from the bank. I personally don't think banks will go out of business. The banking industry is huge and there is room for lots of players. But as P2P takes hold and removes market share from the banks, Banks will have to lower their spread to remain competitive. This will decrease bank profits. Wells Fargo is telling its employees that it is against company policy to engage in P2P lending because that type of lending is seen as competition. Smaller banks like Title Bank have embraced peer-to-peer lending and are actually purchasing these loans themselves to make big profits. If Wells Fargo and other big banks continue to take a wait-and-watch approach as the entire ecosystem begins to develop around direct online lending, all sorts of players, new and old, will grab market share without them, and their fate could just as well be that of Blockbuster, Tower Records, and Border Books.